Well, the US Treasury market is definitely dysfunctional. You just described it. And in terms of like what they can do to fix it, I mean, I heard, and of course I checked the numbers, it looks correct, that the Federal Reserve have recently pivoted and started, essentially QE again, buying US Treasury bonds. It makes sense because, like as you said, um, all those countries are net selling US Treasuries. So the Federal Reserve is buying, and entities at Luxembourg and Cayman Islands are buying. As you know, those are probably U.S. government proxies, or a lot of that is, right? So, so QE is happening, but the new Fed chair, Kevin Walsh, actually wants to reduce the size of the Fed balance sheet, like which means that he wants to actually quantitative tightening. He wants to sell U.S. Treasury bonds instead of buying U.S. Treasury
or let
bonds
them roll off, right?
or let them roll over. How is that going to work when everybody is net selling? It's not going to work, right? So the way I see it is, if they want to hike rates and reduce the Fed balance sheet. By the way, I don't think they want to hike rates right now because Trump and the new Fed chair have said repeatedly that they want to cut rates. And the new Fed chair, Kevin Walsh, actually talked about how he wants to use a new way to measure inflation. Okay, so like core CPE with the top and bottom outliners cut off, which means like whatever they're looking at, for inflation wouldn't include the big swings. So I think in the short term and maybe the medium term, like medium term meaning 6 months to 9 months, they either hold the rates where they are or cut, but they won't hike. But eventually they have to hike. And they want, and Kevin said that he wants to reduce the Fed balance sheet, okay, right off the back. So the only way I see them able to do that is to revalue the US Treasuries 8,133 metric tons of physical gold. Okay? That's the only way I see them able to do it. And if they do it at 4,000 US dollars per troy ounce, like revalue it to 4,000 US dollars per troy ounce from the current statutory price of the US Treasury gold at 42.22 US dollars per troy ounce, they get around $1 trillion from the Fed. All of that. That's how it works. They revalue, they issue the equivalent value of the revalued gold, certificates to the Fed, and the Fed give them the dollar equivalent, which is around $1 trillion. And then after that, they can issue, maybe $1 trillion worth of US Treasury gold bonds, as Judy Shelton have suggested. That's $2 trillion, Gary. Okay? So they can, like you said, once they have that $2 trillion, they can retire some US Treasury bonds, and they can do yield curve control. They can do whatever they want with that money. But I just don't think that they would QE massively going forward. They just cannot do that. If they do that, I think the US Treasury market will lose whatever credibility that has left, and it will run into even bigger problems. I mean, it can be done before the midterms. It's possible because things move a lot faster now versus back in the 70s, right? So they can announce it in July and something can happen before the midterms. That's my timetable if it happens. And of course, I can be wrong, right? I can be completely wrong and nothing happens on July 4th or July 6th. Actually, July 4th is actually, I think, Saturday. So if they do it, it will be July 6th. But like anyway, it I can be wrong and it can happen later. And I know that gold is going to be U.S. Treasury gold is going to be revalued from 42.22 US dollars per troy ounce to a mark-to-market price or something close to that. I would not buy physical gold, physical silver, or miners, I would put all my money in gold call options, leveraged, because I'm an insider. I know what's going to happen. So I'll just leverage and buy gold call options, but I wouldn't go super crazy on it, like a couple $1 billion, because that will raise all the red flags with everybody. It's already kind of like raising eyebrows right now. Me and you are talking about it. But if these guys bought, let's say, $10 billion worth of call options, at 10,000 and 20,000 gold, everybody will be talking about it. Every single time the price of gold and silver drops, China jacks up, the buying of gold and silver. So, I mean, I'm talking about the PBOC officially on the gold side. And then on the silver side, I'm talking about, numbers that we can see from the SHFE, which is the Shanghai Futures Exchange, and the SGE, which is the Shanghai Gold Exchange. So every time there's a price drop, they seem to buy more.
They load the
That's
boat.
what I'm saying. They load the boat. So that's what I see. But I mean, there's a lot going on right now, Gary. I
Yeah.
can't tell people where the bottom is because I mean I don't have a crystal ball. But my track record, I have been pretty good at buying near the bottom. There's like in the last 5 years, there has only been one bottom really in 2023, and I bought massively there. But if you ask me where we are now, it's difficult to say because the fundamentals are so tied together with geopolitics now. I mean,
Well,
people say, look at the fundamentals, don't look at the what's going on geopolitically. I tell them, well, the geopolitics are part of the fundamentals.
yeah.
That's what we're talking about here, right? I'm Gary, you know me. I'm in the net settlement of trade camp, like the Luke Roman camp, essentially. Okay, that's where that's where I've placed myself. I mean, I think what China is doing, and Russia and some of these global South countries, they are essentially, buying all this gold to prepare for a parallel system that will be running alongside the US Treasury system. Okay. So while the entire world right now is still primarily using US Treasury bonds as collateral, I see that in the future, Russia, China, a lot of these global South countries will have an alternative system where it will be gold based. So they will be using a form of physical gold, maybe in the warrant format or a gold bond format, I don't know, but something that is tied to gold that would be their collateral, their reserve. Oh, I'm not saying that they'll give up the US Treasury bond, they'll have some of that, but they'll diversify into the gold based collateral. I don't think, I don't think we're going to be at the bottom or like dwell at these levels for multiple years. I mean, even if we do, that would be like the correction between 2021 to 2024, almost 3 years. It would be painful if that happens, but I don't expect that. So if you ask me, like, let's say if we are building a bottom at these levels right now, the miners are still making a lot of money hand over fist, which means that, theoretically, once the market realizes that gold and silver prices are not going down significantly anymore, the miners should bottom and rebound from these levels. I wish I can say that, but like in the short term, it really depends on liquidity. If there's a US dollar liquidity squeeze, if the liquidity falls like falls through a cliff, let's say, the miners are going to get sold off. But in the medium to long term, I'm bullish. That's what I can tell your audience. I'm holding all my miners. I haven't sold any single one of my miners myself. I think we covered all our bases, Gary. I think at this point, it's just a wait and see situation. The situation in the Middle East is changing, rapidly on a hour to hour basis. So it's just really wait and see what actually happens if like this whole situation is de-escalating or if it is escalating. I mean, even if you listen to the commentary out there from respectable people, it's pretty divided. I mean, there's a big gap. Like there's one group saying that it's de-escalating, and there's going to be a deal at some point, and there's another group saying that no, this thing is going to escalate, and eventually the U.S. is going to have boots on the ground in the Middle East, in Iran. So the way I see it is wait and see what happens. But from my personal perspective, I'm holding on to my gold, silver, and miners unless I see, somehow the US is able to resolve its US Treasury dilemma at some point. So if they're able to, reverse that, the situation in the US Treasury securities market,
That seems
unless
highly.
they can reverse that, yeah. So like unless they can reverse that, I will be holding on to my gold, silver, and miners. In terms of like peace, I don't know, maybe a